market oversight doing their job. Because the company is now at a material risk stage. Does anybody actually know what happened with Sweet River Abattoir? Long story. But effectively, the company listed in, what was it? Dr. Clark can probably tell me, it was 2016 or 15, before? I think it was 15. I bought the shares, regrettably. But yes, I bought the shares at $3 because I understood the business, which is a key element in deciding which company to invest in. But it didn't work out, and it was really the fault of management. There were some macroeconomic factors such as that the high increase in the price of pork that affected them, the shortage of pigs in the December of 2017 that also affected their revenues, and then they defaulted on one of their loans. So the bank then made an immediate claim for, I think it was $160 million. Thank you. Hence, stock price plummets. So that's the risk you take. Okay? And so it's important for you to develop what we call an investing philosophy. Your investing philosophy is a guideline that helps you to determine which companies you will invest in. Your investing philosophy also tells you which companies to avoid. Alright? And by the way, having an investing philosophy does not necessarily guarantee you profits in the stock market, and particularly not over the short term. Okay? What it will do is you will be able to sleep good at night with the companies you put your money in. Alright? And its purpose is basically to guide you. So if, for example, you have, say, a moral compass that says you don't invest in gambling, then a company like SBL would not be as attractive to you. If you don't eat pork, Sweet River Abattoirs you'd probably never buy. And if you just hit every bank, you're not buying NCB, Sagicor, or Scotia. Alright? But there are different types of investing philosophies. Different philosophies in essence. There's a short-term trader or the day trader. And these three question marks are here because really you can't day trade in Jamaica as efficiently as you could say on the New York Stock Exchange. We're a relatively young stock exchange. We're only 50 years old. And a lot of the technologies that are in more developed countries, naturally you wouldn't expect to see them here. What I do commend the Jamaica Stock Exchange on, however, is the fact that they are actually now adopting a lot of those technologies. So there has been talks about them now starting to integrate blockchain technologies. There have been talks about them adopting the NASDAQ platform. And they're also consistently upgrading the features of the platform in and of itself. One of the more recent ones being the launch of the JTrader Pro platform. Okay. So the short-term trader, we don't have much of those here in Jamaica, and for those that do exist, they primarily function on the international exchanges. Okay? The next one, and I'll go through these quickly. I think I've only like 4 slides left, so we're soon out of these. The growth investor is looking for companies that will have relatively high growth in very short periods of time. Good examples. Wisynco, a company that can increase its revenues or its bottom line, which would be the net income, by 20% per year. That's a growth company. By comparison, a value investor is looking for companies that have stood the test of time. He's not necessarily looking for a company that is going to grow astronomically. What he wants is the safety and the assurance that the company will be here 10, 15, 20 years down the line. Good examples, MCB, which is over 100 years old. Grace Kennedy, which is now going to be 100 years old in 2020, I believe it is. And there are others, even smaller companies like Barito has been here since the inception of the Jamaica Stock Exchange. The technical trader, the technical trader is the person who basically spends his time looking at the graphs, the numbers, the volumes trading. That's basically what he studies. And he's looking for an opportunity in spread. The spread is just a difference. It could be a minute difference. It could be 5%. But if you're making 5% on $10 million in a matter of days, you can see how this kind of is a worthwhile strategy. But not many young investors will use the technical trader approach, and primarily not in Jamaica where the data is not as readily accessible. Okay? And then there are various other mixed philosophies. So there is the short-term value investor who looks at short-term trends, but those that particularly affect long-standing companies. For example, this current trade war that we're having, it's impacting companies like Apple. So the short-term value investor sees this as an opportunity to pick up Apple shares at a very low price. Okay? And because he's a value investor, he's holding these shares for 15 years, 20 years. And so he ends up in a situation like my mentor, who pretty much got his shares and now has the equivalent of, I can't tell you the number, but it's a few $1 million. Alright? In NCB stock. Okay, so the skills you need to be successful in the stock market. If you don't love reading, this is not the place to be. Because it requires a lot. I don't know how many of you are actually in like stock market groups, but they literally do not sleep. Alright? I'm sure some of you can attest to that. The other thing is networking, which is why we're putting on stuff like this. There's always somebody who knows something you don't know. Okay? Regardless of how mundane it might be, or regardless of how eloquent it might be, you can learn something about a company that you're investing in from almost anybody. It was a taxi man that literally told me that, well, again, switching to the vernacular, his exact words. I'm very bad at speaking, but he said, "Dog, every corner go on never be the same." That's a hint. No, really, I'm not with that part, so forgive me. But that's a hint because which company benefits from booming construction? Carib Cement. Within the time that he told me that, you can actually go and look back at the chart. You're correct. You're correct. They do need to be. I didn't even think about that one. But you're right. I actually, speaking of Virgin, I'm going to segue just a bit. But what I observed with Virgil is, and this is just cultural, so another thing you need to pay attention to. Think about Christmas time. You can look back at all of Virgil's quarterly filings that follow Christmas. The revenues are always higher. And that's just because of the Jamaican philosophy. I can tell you that if Virgil existed in Brazil, it would not make a difference. Same thing probably in Haiti. They don't pay their houses. So, contextual, alright? The other thing, but critical thinking, excuse me, I know your name, but remind me. Shani, what Shanice just did, that's actually second level thinking, alright? So, you need to employ critical thinking when you're looking at companies. The economy is all interconnected. Everything affects something else and is affected by something else. And you want to remember that. Alright? Simple math. Subtraction, addition, percentages, multiplication.
With the critical thinking, where you said that everything can affect everything, there was a point a point in time where Elon Musk was on a podcast and I'm saying that there was a point in time where Elon Musk, the owner of Tesla, was on a podcast and the owner gave him, the host gave him a split the smoke and Tesla stopped because of that. And so
what would you attribute that to? Do you think that's critical thinking? Do you think that's emotional sentiment? Or do you think that is just perception?
well, I attribute it to perception.
The perception?
Yes.
I would agree with you. What he said? He said that, so Elon Musk was on the Joe Rogan podcast. And Joe Rogan, which is a very controversial character just in and of itself, gave Elon Musk, who was already being sued by the SEC, a stick to smoke. And he took one puff of it, and that image, I think that image perpetuated through social media for days. The stock price went down because of that. Mind you, nothing fundamental changed in Tesla's business. And that is why this is more of a perception than a critical thinking. Alright? So in regards to Tesla, what could be some happening, some observation that you could make that would employ critical thinking? That's your homework. And since we're networking, if anybody knows the answer, you can tell it. Teamwork, make the dream work, alright? Sorry? The homework is learn to find a happening or a macroeconomic situation or anything related that could that you could apply critical thinking to that would either benefit or hurt this. Anything jumps out at anyone?
Last thing, marijuana,
that's possible. It's a long shot, but I'll take it. I would look more at the company and look at, I'm not going to do that. Just look at the company and look at the current trends. That's it. Alright? Then, the next one. Objectivity. One of the worst things you can do is to be very emotional about, and I'm speaking from experience. Worst thing you can do is apply your emotions to your investments. The stock does not know that you own it. It's not going to feel bad if you sell it, and it's not going to parade if you buy it. Okay? So you can disconnect your emotions from it. You're simply looking for profitable potential within the stock, and if you realize that, you're free to leave. Somebody else will buy it. Alright? And then, of course, that determines on that is determined by your investment horizon and stuff like that. Alright? You want to keep those things in mind when you're assessing buy and sell decisions. Actually, am I running into your time? Okay. And then the last thing is patience. And that one is in bold because if you have this one, you will become rich by default. And that's, I'm not just saying that. It's very true. 2 years ago, 2016, 2015. In 2013, NCD stock sold for $23 per share. Caribbean cement stock was selling for $2. And it's at 80 now. So that's an even bigger percentage. So if you can apply all of the above and master the patience part of it, rich by default. And by the way, especially the last one, women are really good at that. I am of the very firm opinion that in the next 30 to 40 years, Jamaica will have the most women that are millionaires in the Caribbean. And I can actually send you the stats for that as to why it is, but that's again another macroeconomic trend that I'm watching, able to apply critical thinking to it. You guys want me to explain why it's doing? Yes? Okay. So we're going to look at two things. We're going to look at literacy, we're going to look at the population distribution, and we're going to look at the percentage of women that are in managerial positions. You do know that there are more women in middle and senior management positions than men, right? There's another statistic, thank you, I'll add that to my model. The next thing you want to look at is if you look at the University of the West Indies, and I know you, Jamar, can give me far more statistics on this, but if you look at the gender distribution of the University of the West Indies, we're what? 4 to 1? No? Yeah, 70-30? Conservative.
80-20. 80-20.
We're 80-20. Alright. Jamar does these things for stats, so he knows these figures. So just by numbers alone, we have more women in the population that are in university. University, or university level education, is normally a gateway into a relatively high paying job. Hence, said women will probably have a lot more disposable income than men. Yes? Does this make sense? Me and I go here, so you as well. So the next thing is that now, the Jamaica Stock Exchange, the Ministry of Finance and the Financial Services Commission have been embarking on a drive to actually incentivize women to now move from just saving to investing. And could you say that it is catching on?
Yes.
Extrapolate that for the next 30 years, and what do you end up with? You end up with rich Jamaican. Again, I'm not going there with you guys. So, the last thing that I want to talk about is the miracle of compound interest. And what I'm going to do is, it's an exercise. I'm actually going to send you guys the link to see if there is compound interest calculator. Could I have 4 minutes here? All right. And as Ashton comes, I'm going to place it in the group so even those that are streaming will be able to see it. You drop it? By the way, is everyone here connected to the internet? Mostly? Perfect, that's cool. Okay, so that link will take you to Caribbean Value Investors Compound Interest Calculator. What we're all going to do is we're going to set ourselves a target. Well, we're going to choose a starting balance. I like to choose 100,000. And you're going to set a target. Whatever target it is. $1 million, $1 billion, $1 trillion, $10 trillion. Whatever the number is. And then you're going to put in an interest rate of 25%. And then run the calculation. So select your target. We can do one simply now. Or you can go through this example then. So put in 100,000, interest rate of 25%, and your target being $1 million. And how long does it take you to turn $100,000 into $1 million using compound interest? Alright, so you guys have the link. You can play around with it, play around with your targets, play around with your interest rates, and play around with your starting balances, okay? And you can use this to basically chart your investment goals for the year. So it will help you to do two things. It will help you to determine how long it's going to take you to reach your goal, and it will help you with, in the first instance, to actually have a goal. And that's one thing that beginner investors tend to not consider. You need to start out with a goal. It's broken. What do you put? NAM. Oh, you put in not a number. Oh, right. No. So. Exactly. So you just put in the numbers. You don't need to put in the percentages. The instructions are at the bottom. You can just press OK, it will tell you. So press OK on the 2 prompts, and it will give you a statement at the end of it to tell you. Alright? So now you can play around with the targets, you can play around with the interest rate. I want to make this point, and it's a very important point. It is very difficult for the average investor to make 30% consistently in the stock market. Over time, you can do it very well, but in the short term, it's very difficult for a beginner investor to make 30%. And I say consistently, okay? And anybody, by the way, can triple their money in the stock market in a week. Just find the most high IPO, put your money there. It's a bidding system. So naturally, where there is scarcity and a high demand, you will see a price increase. And that's pretty much it for me, really. I'm going to send you this tool. This is a target exit calculator. What it basically does is, if for example you have, or you want to buy NCB shares at X amount, and you know the price, you just need to put in the value, the amount of shares you want to buy, the last trading price, and the amount you want to make on it. There's detailed instructions as to how to use it. And it will tell you the precise value that you need to sell the stock at in order to make the net gain of X%. Yes, but you have to pay for it. So I'm going to just show you.
Oh, okay.
And again, so lastly, I didn't do too bad. I did do one more, relatively. 201. Actually, that here. 3 takeaways. And these are pretty much the 3 things you just need to know. The stock market is just a market. The only difference is that it doesn't list fruits or whatnot. It lists companies. And there are certain rules that are governing those companies. Okay? So, as with any supermarket, I'm sure we've all gone into the supermarket and looked at the price of something and never buy it. Yeah. So you don't have to be pressured into buying something, whether it's because I say something that you think might be profitable, or your broker sends you a brochure, or they like to do this thing where they send you the buy, sell thing. Just, you can ignore that. Like I said, the more frequently you trade, the more beneficial it is for your brokers. So think about your investment philosophy, think about your goals, and then think about what you know about the companies that they are recommending. If 10 brokers tell me to buy, which company will I can't remember. Which company? I'm asking myself which company I don't understand. That's understandable. But alright, for example, if I were to say to you, Indies Pharma, what does it mean to you? Indies Pharma. Anybody knows that company? Alright, so one person. So if 10 brokers, if I were any of you who didn't know what Indies Pharma was, given what we've said here today, if 10 brokers said to me, look, you need to buy in these family, what course of action is probably my best bet? You exactly. Go and learn about it and then ask yourself the question, does it fit within my investment philosophy? Do I understand it enough? And does the time horizon match with my objectives? And if not, again, you can disregard it. I've found myself often buying stocks that other people are recommending as a sell. RGR was one such stock. I bought RGR at 96 cents. And you have some idea where, well, you might not know, but it went up to $1.96 very recently. I think it's down to $1.60 now. The second is that the stock is literally just like the title of a company. So the fact that you own the stock means you own an interest in the company. Alright? And you can think about your stocks as titles for that company. The more of the title you own, the more of the company you own. And then lastly, alright. Okay, you can read that. But what it's basically saying is that when you buy a company, you're not just buying the name. You're buying what that company owns. You're buying how much money that company has on its balance sheet. You're buying the potential of that company to realize even greater profits into the future. That's what you buy when you really buy a stock. And then lastly is to get the Jamaican guide to securities. Alright? And that's it for me. That's the end of this presentation. Alright? Oh, sorry. Any questions?
Really, this question is about recession taking place, for example, in China, US. What implications that may have on the
I will answer that with an analogy. Well, you know, it's long been said that if the US sneezes, we get a cold. That's actually not correct. It's actually if the US sneezes, we get pneumonia. So, I allow you to extract from that. There are a lot of people who want to think that because Jamaica now has record reserves and or inflation is historically low and or job numbers are looking really good, employment is historically low, that we now all of a sudden operate within a vacuum. That has never been true, and it will never be true for a country like Jamaica. Okay? So you can take that into account. Another thing is if you stay after, most of you would have heard about this yield curve inversion that you're talking about, yes? If you stay later, I will actually show you a video from a course that I did on the importance of the yield curve inversion and why you should be worried about it. By the way, just to spoil, every single time, the yield curve has inverted, we have had a recession within 3 to 6 months thereafter, without exception, across multiple different governments, across multiple different economic times. It is almost, well, I won't say it is almost like a law, this is a law, really, just by what it represents. Alright, so if you stay later, we can actually watch that video, and you'll have a very good understanding of its implications. I'm done. Any other questions?
Selling at market.
Selling at market?
Yes, at market.
Okay.
What does the market represent?
The market, okay. So the market represents, so remember our analogy earlier about our example where we're talking about recently the stock trading within the day. The market would have been the ask price that Jamar set. So, the last ask price, very good. Alright, so that's market. Sorry? No. And how would you determine if it's a loss? You go ahead.